Hello and welcome. Today's date comes in that of Friday, the 17th of April, 2020. My name is Derek. This is a Money Charts channel. Like always, all bets, trades, and of the like. Well, that's within each own risk and their own reward. I'm going to start off within the SPY, which is the indicator for the stock market. And this is an interesting date. March the 11th. That's the Rudy Gobert day, or the day in which the NBA, well, he was tested positive for the current event, we'll call it, the C word. And then, of course, the next day, the market just a major down day, as it went from 275 down to 247. So that's like 12% or something. Just a decent sized decline. Then we go up, we go down, we go up and down. And well, as of now, well, this is noticeably a key low, whether it's going to be the bottom from, well, this move, and well, so far this high, this low, and well, we're above those levels now for the stock market, and it's going to keep going up until, of course, it stops doing so. And one of the key levels I'll be looking at is, okay, let's first take a look at Fibonacci, and I haven't calculated it yet, but what I do is I take the high and I divide it by the low. So I'm going to look in here and try to find, well, which day is a high. It looks like it's this day here on February the 19th with a 339.08 level. So I'll put that into my calculator. And I'm going to use this one in here. And I'm going to put the decimals in this format here because this is my automated one and automatically is going to round it for me. So that's the high. The low, which is obviously this March 23rd date, well, it comes in that of 218.26. So the first level coming up is a 242, 17 cent mark. So I'm just going to, oh, pretty close, but stick a line there and just see how it works. Then the one after that, which is the 38.2% level, I'll bring that back up. That is 258.26. So we can see that it's already gotten above the 38.2%. It did resist it, and we can see it supported this one well. The 61.8% indicator comes in that of 286.56, which is pretty much where we're at now. So it's a key interesting situation here. I'm just going to leave it at that. So we take a look at this, say, on the hourly term. It originally did resist this 242, but only on its first occasion, because the second time it came up to it, it supported it on this hour. It lifted off from it here on the 10:30 timestamp on March 25th. We resisted at 258, piercing above, coming back to the 18, a second test down, a third test. We supported, but overall unable to hold. This entire part was resisted. It supported. This is pierce above, which sucks. And a lot of times, like, okay, I'm looking to buy at, like, say, 242 and a quarter, 243 even, and they don't hit. And that's why sometimes it's not always going to work, and that's one of the spots where it obviously did. And then we have the situation here, April the 6th, where the market just gaps up at this Fibonacci point, and then it immediately lifts off from it. And since then, it has just kept on going, making higher highs and higher lows. Now it's approaching this key Fibonacci level at 286.5. It's been piercing below it, but usually it's going to do a bit more. How much more we're going to do is it has survived every time. It has been showing this weakness on the 18 average of lows thus far. And now it's above it, so it's going to be either through that of time or price for it to meet up with it again. So we can see the 18 starting to re-rise. And Again, it's going to keep on going until it stops. Now, overall, my view of this market is we're in a situation where the current situation is going to cause economic problems, I believe. It's just a catastrophic levels. So with that being said, to me, I think there's a double whammy, I feel. One, these things are going to go down in capitulation levels when people are trying to liquidate funds. It wouldn't be a surprise, as we've been seeing, just like the Dow moves here. And bear markets having these lower high rallies are just to be expected. So when we take a look at this on the weekly term, we've come down well below the 18 average. And now we are here resisting within this band. 18 average of high is currently in at 298 with this. And of course, declining at a dramatic rate right now. So we start to leave below this. I mean, it could be very large on how the decline could be, because we could see this thing a few months later at 150 or 135. And right now, of course, it's better than double that number. Moving over onto the gold chart and the monthly term time frame. These Fibonacci levels I've had in for a long period of time. And we've known about them since, well, 2016. They've been, because we're taking this high of around 1920-ish, which is 1920.94, and the low around 1050 here, or that of 1046.54. And the 38.2% Fibonacci level of 15 and 22 most certainly was a level of significant resistance. Doing so in here, pulling back to the 18, holding it. And then two different times in here through this little period between 2017 and 2018. And then a decent pullback, several red candles down, going below, but really still holding this area and making a higher low to this one. And then another little bit of resistance that occurred in here, but just a little bit, as we can see, just this little pullback in here, 3 small red candle periods down, and then a superior liftoff, clear move to the next key level, where it certainly resisted again with this sideways action, not correcting at all through top price, only through that of time, about 4 periods, because it didn't come back anywhere near where it came from at about 1366, let alone the 1321 barrier. Breaking out, and then when we take a look at what we have now in the couple periods and what precedes it, we have the breakout, of course, here. This green candle up from this low breaks this level of resistance in January. In February, comes up to this resistance high where it's supposed to, we'll say, quote unquote. Big pullback in here. We can see this little, I don't know what you want to name it, but it goes up to this resistance level again. We've had this big pullback, and now it's lifting off, breaking above this. This, to me, is a superior looking pattern for the situation, that we're going to at least have a retest of this low $1,900 level as its next key place where it should go to. On the daily term time frame, we are seeing on the session today down 1.5%, but it's above these March highs, and we're at levels, of course, on the U.S. not seen since that. Well, I can't even show it on the daily. The $1,900 top back in 2011, late in that year. So therefore, this area of resistance I've been looking at, for the first time, I'm going to say, okay, let's seriously look at it as support. Whereas in here, when it broke above it, it was there for the first time, so it obviously didn't support it. This break, it never had a spectacular move or break above it. So again, not a big surprise that it resisted again. And here, it was a situation where, okay, this is liftoff support, if it could do it. And it most certainly did. So now that it did it, it comes up to this high in April. Well, April 14th, rather. We've had a couple days, just a little bit of holding in this area. So now that that's the case, we're already down 1.5% after we had about 1% a couple days before then. And to go down to 1669 or 70, that's 20 plus points, even well over 1% from where it stands. And it can pierce below. We have the 18 average of lows in here. So I'd be looking, if it comes and supports this area, that if you see anything of this type of nature, that is just a very bullish pattern in itself there as it is. But it also means if you're looking to get buy orders in, this is where it could be stubborn if it doesn't go down there, because I'm like, not me, because I don't got an order here, but you could have an order in at like, say, 1670. And if it doesn't go there, right now today's low is 1683, so you haven't hit it yet. But there's a decent chance it's going to hit, though. I would think. We'll see if it comes in or not. Now let's switch it off into the quarterly chart, the 3-month period. And right now we're looking at seven consecutive quarters up in a row. Well, I mean, it's got to hold this one. It's up 7% to start right now. We're up $111 so far in Q2 2020. And we're doing so as it's leaving what has been a sustained sideways correctionary move for gold, where there really wasn't much price action. Yeah, some people might have thought so, especially, I don't know how this is going to look when I change this log. I'm going to put this on a linear. It doesn't change much. But even then, you can still see that it didn't have that large of a retracement. We did not come back down to this key level resistance of about 700. It didn't even break that 1,000 number, albeit it was close. It never did much below this 18 average of lows, since all it could do was really flatten it out, neutralize the situation. Couldn't really sustain or enter that of any bear market. For the only attempt it had, given that it had a sideways move in here, was this spot in here as it was breaking this level of support. But what it didn't do was break down. That's really what this announcement really here was. And the fact that it had this bit, it didn't go even down to about here even. So even not only 1,000, but even piercing below 1,000. But it also went to this resistance matching this high, which isn't going to be obviously, I mean, it can still be bearish in the sense, well, here we got this red candle down, matching high to here. Okay, so does it, no, we don't come down here, but we come to this resistance, but still haven't broken it yet in this low here, which is, I mean, this is where it got relatively a little symmetrical. But it's broken that symmetricalness here, obviously, to the upside. So this is where we're not an area where I consider, okay, this is where I like to call it weak resistance. Because I don't know how probable the chances of resistance it's going to encounter, the chances of it. But not only that, I like to say weak resistance, and maybe it is resistance, but with not much in a price correction. Sort of like this is really weak resistance in the fact that it only went down to here. We had this huge run, and all it retraced was just that. So meaning here, we have this run in here. And even if it does come down to this previous level, as a bettor or a trader, given that I feel that the upward potential for these moves is pretty large, is it really worth a few hundred points to sell here, to try to buy it back in here, and then try to get your big gain after that? I don't know. I don't think so. That's, again, another reason why I like to call it weak resistance, because I don't think I'd want to sell to try to buy low, sell high. And I think this is a good area for a high sell spot, meaning I'm looking to buy back at a cheaper price. Rather, I think I can look, if I was to be trading this, look for, of course, higher sell levels. Now, as it comes down to it, and the current situation, I want to talk about unemployment. And the numbers in here are so wrong. But let's take a look first at initial claims, which is now, okay, so the next one was 6 million last week. Now 5 million this one. It is updated again. I wish the weekly charts would look better, but there's just way too many amount of people that are claiming for this. But it's because, oh yeah, we've shut everything down. So as it stands right now, and until we get this lockdown taken away, and it's going to be high when the lockdown is over. Of course, not as high, but how high is the real unemployment? And for me, I want ages, I would think 18 years of age to 65. I suppose if you're in college, university, you can be withdrawn from this, I suppose, with other miscellaneous things. But eligible people working, again, in this age gap. You work at Walmart right now, you're working at McDonald's, you're working at blah, blah, pharmacy. Yeah, you got a job. There's a lot of people in just these types of industries that don't. And maybe I think my number at 50% is far skewed, but I don't think it's high. Because a lot of these businesses have been shut down. In these numbers here, what do we got? Unraked. 4.4% they're saying. I mean, this is... If the times weren't so bad, I mean, I don't know what word to use. I guess it's a lack for words, or a lack for better terms, laughable. That this is the number that they're going at. And I mean, we're at the lower end levels from like... At least since like this breakout here in the end of the 60s, start of the 70s. Had this head and shoulders pattern in here, left shoulder, head, right shoulder, down in here. And then the unemployment rate was really high back in 2008. But, I mean, no. I mean, these numbers are obviously skewed, quote unquote. The economy is in a very bad situation. And I would like to say we could have history books talking about what it's like, or what history has shown when we've had this kind of spot of all these businesses being shut down. I got to think the first time in history that unemployment rate is 50% for almost every country, most countries. Sweden, no, because they haven't locked down the whole essential word. Oh, it's an essential business. Should we be allowing you to open? Forcing, and all these business owners a lot of them are now going to be struggling financially now. And then the people it's just bad times. And now we're going to see this economic principle of quote unquote more money. And the reason why I'm using quote unquote because of the word money, I like using the word currency, but more dollars or yens or whichever currency you're using in your local country, facing less items in which can be purchased. You cannot go to a sporting event. You cannot go to a restaurant. It might be hard to go to a dentist or get a massage or a chiropractic treatment. You can buy food. That's going to inflate now. Toothpaste, juice. You can get hardware at a hardware store still. Some of the essential items are going to go up in value as we move forward. And we're already seeing not as many discounted items, at least on the items that are of popularity. And right now, again, toilet paper and hand sanitizer. I mean, these things are just going to be going up in price moving forward, even with the cheaper gas prices and the low oil prices. And speaking of oil, I don't know what to explain for what happened on the crude oil market. I mean, all of a sudden last night, it just gaps open and then, oh, yeah, up like a whole lot load. It can't be 18. Is it crashing that bad? It was like 24 or 26 even. Last I checked, and that was just a little while ago, like like an hour or two ago. It's 11:30 as I'm doing this. Yeah, it was like 10 o'clock or something, I thought it was. How can it be 18? That just doesn't make any sense. Okay, FinViz, what do we got here? See, it says here $25.16. And the futures I thought had it, maybe it's the second one. These are their charts. This is a daily chart, so let's just take a look at this on the hourly chart. So this is what happened here. We have this down move. We have $29 oil on April the 5th, 6th, all that type of stuff. And all the moves, then the decline. And here we had $20 supporting April 14th, bouncing up to 21. And then breaking 21 on the 15th. And now congesting at it for the 2 days, 15th and 16th. And then today, or really last night at 6 o'clock, it just gaps up here and does that. I tried to find news announcements last night. I wasn't able. And I didn't even search for today. I mean, there's a 5-minute time frame. It just does all that. And then normally you would think that if you had that serious of a gap, you'd have some serious volatility. And really it hasn't been that serious. Anyway, thank you for tuning in. Have yourself a great day. Bye-bye.